Aloha and welcome to Atlas Insurance's Risky Business. My name is Sean Satterfield and I'm the Business Development Director.
Hi, I'm Choi. I'm an account executive with Atlas Insurance. Sean, can you tell us a little bit about yourself?
Sure. I was born and raised here in Hawaii. I've been in the business community for over 30 years and specifically with Atlas for 5. What about you, Shane?
Also local born and raised. I've been in insurance for 10 years. I'm in Atlas for 10 years. So I've been here a long time. Sean, just tell me a little bit about, what are we going to talk about today? What's the purpose of what we're doing here, this podcast?
Sure. So we're going to talk about insurance and how to understand it better. I think many owners and board members have a hard time understanding what insurance is because it's a little intangible. So we're going to kind of bring it to understand how it applies to people, what the insurance policies cover, and also what the responsibilities are. Because as a condo unit owner, it's important to know, and many people don't even think about it. It's kind of one of those things like, yeah, we hear about it, but because it's been such a major issue in the last few years, we're going to talk about that.
Right. And I'm a condo unit owner myself, so it's really a subject that's close to my heart. So it's something that I'd like to just help people to understand. I may understand it myself because I'm in insurance, but I think, just helping the layman or just the community to understand what's going on in insurance and what we can do practically. I think that's a very important part of what we do and what we're trying to do here.
I agree. Well, why don't we get started? So today we're going to be talking about condo insurance and how it really relates to everyone. So for example, we're going to be talking about maybe the master policies. We're also going to be talking about maybe some of the HO6 policies for the owners, but really to understand it, because what we found as we went through the 2024 crisis and coming into 2025, people still don't understand insurance in general because it's intangible, but how they can relate to it and how we can help them as Atlas Insurance Agency.
Wow, there's just a lot going on in the past few years, right? Can you just think off the top of your head what sort of things have happened within the last couple of years?
Oh, there's been a bunch of things, but one of the main things I think that has affected the industry was just all the natural disasters that have happened all over the world, and including the one in Lahaina. Right. And so I remember a statistic that came out there was something like 28 natural disasters, the most that has ever happened over the last year or two. Right. And that caused the insurance industry to go crazy. Lahaina specifically was one of those. And that was specifically was a windstorm firestorm wind. And that caused a lot of issues. And then going forward, we have people staying home a lot more because they're working from home. So you have a lot more water damage claims. Right. So there has been a lot going on in the world.
Yeah, certainly. I know you mentioned the condo insurance. So there's a master policy and there's an HO6 policy. Mm-hmm. Tell us a little bit about, what's the master policy? What does that cover?
So the master policies, there's 4 main ones that you need. 514B, Section 143. And so one of them is the property. The property is going to be big. The second one is going to be the general liability. Mm-hmm. The third one is going to be the D&O, and the last one is going to be the crime. So those are the main ones. Shane, can you give me an example of, what is the property?
Well, the property, you can just kind of think of it as it covers the building, the structure of the building, as well as the interior of the unit. So you have the walls, the floors, the ceilings. Mm-hmm. One example, I would say, just thinking off the top of my head, we had a unit owner that, they came back from, shopping. So they had the groceries, placed the groceries on top of the burner on the stove. By accident, a cat came by, turned the knob on the stove, and just started a fire. Naturally, the fire caused it damaged the kitchen. Mm-hmm. Also made the sprinkler go off. So there's water damage, fire damage, not only water damage to that unit, but also the unit below as well. In some cases, water damage can even penetrate all the way down to the lobby.
Wow.
So just living in a high-rise condo, it's a pretty big risk or exposure or liability on the part of unit owners. So definitely something to think about. Can you think of anything else? Anything as far as property insurance is concerned? An example?
Yeah, some of the examples I can think of is, one is just water leaks that happen. Sometimes pipes get old because of over time they do that, and they may leak into the walls, and that can cause a lot of damages. A rule of thumb typically is that if it's the vertical lines or pipes, they typically, not in all cases, but typically will belong to the common element or the master policies will cover that. And the horizontal lines will usually be the HO6 policies or the owners. And that can cause some issues. So those are the two things that I can think of.
That's a good example. And at the end of the day, we're not specialists in plumbing by any means,
right.
But good always to check with a licensed plumber, right?
Yes, always good to check with a licensed plumber. Yeah.
So that brings us, so we talked a little bit about property insurance, but what about general liability? Can you think of any examples for us?
Yeah, so general liability is going to be mostly about the things that happen on the property that could cause damage. Slips and falls are a common example. And I remember one client that had a little waterfall, a little water fountain, if you will, that was causing a lot of water to spill on the sidewalk, and that caused the slip and fall. And that falls under the general liability because there's going to be, it could be damages for medical issues, is a typical one. And we have a risk assessment team that actually helped mitigate that problem.
Yes.
And what they found was that the slip and fall had happened over a series of months and actually years. And they just recommended they turn the volume of water coming down, which made a huge difference, and that mitigated that problem. So, claims is another reason why your premiums go up. So they help mitigate that. So that's an example of general liability insurance.
That's actually a really good example of what is it called that, when we're trying to help lessen the chances of things happening when it comes to general liability or otherwise?
Yeah, just mitigate those issues, right?
Risk mitigation.
Risk mitigation. Yeah.
It's part of this risky business that we're in.
Right. Exactly.
I'm trying to thinking of another example. So most associations we have, some associations we have trees in the landscaping. I remember a client that had some trees. Also, of course, there's trees along the side of the road. Mm-hmm. There is of course cars parked along the side of the road too. In most cases, the association is responsible for maintaining those trees. Mm-hmm. So I saw an example where there was a wind event or just a windstorm happen. A lot of these trees are older, can be prone to falling down.
Yep.
What happened was this windstorm overnight, it caused the tree to fall down on one of the cars. So naturally, the car that damaged, pretty much a total loss. And what did the person that got their car damaged do? They wanted the board to pay for it. And they said on the basis that, the board didn't properly maintain, or the association didn't properly maintain the trees on the grounds.
Okay.
So it's another example. Property damage, right? Property damage is one liability, and then you mentioned bodily injury or people getting hurt, slips, trips, and falls, right?
Yeah. That's a great second one. The other thing I'm thinking about too is what are the D&O? The D&O is another coverage that associations need. Can you give an example of that?
Or just to clarify, D&O, directors and officers liability insurance, it covers pretty much there's language in the policy that talks about wrongful acts. So a wrongful act can be anything. The association can be liable or be alleged to do something wrong at any time. Mm-hmm. So whether the association is doing everything right all the time, or otherwise, there's coverage, there's protection for the board for that. So one example that I'm thinking that I saw for one of my clients is in most associations we have what's called house rules. Mm-hmm. House rules, govern the association, tell what unit owners can and cannot do. Mm-hmm. We had one unit owner talk about this as the 2 vehicles, 1 car stall or 1 stall. So there's a vehicle, there's a parking lot in each association, parking stalls assigned to each unit owner. And basically what the unit owner had done, which was against the house, was they parked 2 vehicles, 1 car, and then right in front of the car, they parked a motorcycle. That is against the house rules because they're only allowed to put 1 vehicle in the stall at one time. So they were given a chance to, stop doing that. The board gave them a notice, a warning. Eventually, they kept doing it to the point where they got fined. So come to find out that another unit owner had done the same thing. And instead of a motorcycle, they had parked a moped in front of the vehicle. So the unit owner that had the motorcycle, the first incident, could say that, the board, they're enforcing the house rules against me. Mm-hmm. They're fining me, but they're not fining this other unit owner. So they can, demand for damages or, basically have that they rectify that. So that can be a D&O claim.
Yeah, that definitely can be a D&O claim. Another one that I'm sort of aware of is that, sometimes if you don't have full coverages, so there's a potential for your D&O not to be able to defend the board. Because I remember last year, there's a potential that if you didn't get full hurricane coverage, that could be an issue with the board because some of the owners can't sell their homes. So there was another issue. So the D&O does protect the board. It protects not only the board members, but it also protects the officers of the board. And that could include the general manager, that can include the site manager, or any of the people that work for the board as well.
And I think you bring up a good point that in a lot of policies, there's exclusions to coverage. The one that you mentioned was, I think it has something to do with the failure to maintain adequate insurance. Yes. Yep. So it's why, having a good agent is important to review policy, review exclusions, compare options if there are multiple, and just make sure that, coverage is what it should be, that there's enough, that it's adequate for the board.
Yes. Yeah. And that now it brings us to our last insurance coverage that you need. And that is, it's crime, or also called fidelity bond.
Fidelity bond, right.
Give us an example of that.
Actually, this is a bunch of names for this: crime, fidelity bond. Another one is employee dishonesty. Mm-hmm. So employee can be considered a member of the board. It could be an actual employee employed by the association. It could be the general manager. But a lot of times what we're talking about when we're talking about fidelity bond is we're talking about association funds. So a lot of funds come from maintenance fees. Mm-hmm. So that goes into an association account. Those fees or those funds can be possibly, stolen, just like any other account. So whether it's, a general manager or property manager, we had an example where, over a period of many years, property manager had embezzled funds from the association. And the association needs these funds to do their maintenance projects, to continue to run the building, to pay the employees. If they don't have those funds, it could be catastrophic for the board, for the association. So it's an important coverage for sure. And I see why it's required for revised statutes or condominium law.
Yes. And these are just a few of them. I mean, there are many more. Mm-hmm. I mean, we haven't talked about the flood. We haven't talked about cyber insurance. Right. We talked about hurricanes specifically, which is part of the property. But those are all important insurance coverages. Equipment breakdown is another one. Right. Anything else you can think of?
There's just so many coverages out there. It's really dependent on, what the association needs, what they feel that they should be protected against. Mm-hmm. One of the big ones that you mentioned, I think before, was hurricane insurance.
Yes.
That's included on the property insurance a lot of times.
Yes.
So, we just want to make sure that our clients are properly covered, properly maintained buildings. But actually, that brings up a good question. What are some things that associations can do to kind of increase their chances of getting insured, or just put them in a favorable light?
That's a great question. So one of the things that causes premiums to increase is going to be your claims, your loss runs, and you really have to look at how to mitigate those issues. So a lot of times running, having a risk assessment, coming in and looking at the property, walking the property, checking the high risk components.
Right.
So that can be your plumbing, your electrical, your roofing. Typically, that's what the carriers are going to ask for. So the age of the building, if it's sprinklered, non-sprinklered. So making sure that you are mitigating those issues so that you can get favorable premiums is going to be really important in the future. So I think those are some of the things. What other things can you think of?
Well, part of what you mentioned was, maintaining the components. So the main components in a building is going to be the roofing, the plumbing, the electrical. Those are the main three. Some buildings have AC, HVAC systems. But I really also like that you mentioned I think it was a reserve study that a lot of associations have. So a reserve study is basically a study that's done about all the components in the association. It could, tell us about the roof. What's the useful life on that roof? How many years is it good for? How many years remaining until they have to replace it? So it's just practical things like that really help owners to continue to, increase their insurability, if you will.
Increase insurability.
Yeah. Mitigate risks.
I do have a question that a lot of owners ask is what is the difference between the homeowner's policy, and that's typically in a condo, the HO6. Right. If you're in a home, it's an HO3. But what's the difference between that and the master policy?
Well, again, the master policy covers the building, right? The interior of the units, but HO6 in general, it covers the interior of the units, but the betterments or the improvements that unit owners have made. So where the insurance for the condo, the condo master leaves off is it covers the as originally built construction.
Right.
The interior of the unit. So when that was conveyed from the developer or the builder to the association, that's what the association covers.
Got it.
Whereas HO6, you're coming in, if you do any renovations, you improve on the unit, make betterments, then that's what you should cover. However much you put into renovating that unit, you want to make sure that you have that coverage.
Yes.
HO6.
An example I use is that if your unit is the glass and your contents or improvements to the water, whatever you can turn that glass over, whatever comes out in the water, that's what the HO6 covers.
Right. Good to put it in perspective, actually, make it in simple terms, right? I think another important aspect, and really where the master policy and the HO6 kind of interact, is the deductible, right?
Yes.
So we have deductibles for water damage, fires. So how does that interact between the master and the HO6?
That's a great question. So the deductible, it really is, you want to make sure that the deductible matches your HO6 deductible. So deductible of the master policy. Right. And the important part of that is keeping it in a reasonable terms, so reasonable amount of coverages. So right now, today, currently, $50,000 of coverage of deductible will be suffice for most insurance carriers. Because if you get too high, you're going to run out of insurance carriers that even offer HO6.
Right. And what's the reason why a deductible is increased again?
Because of loss runs.
Right. Because of claims, right?
Claims, right.
Yeah,
claims,
you have water damage, severe or frequent.
Yes.
That means the deductible is going to increase, which means that owner is going to be on the hook for more.
That's right. And it's really important to mitigate those issues, because I think a lot of people don't understand that if there's a problem, the insurance carrier is going to be looking at that problem. And if it keeps happening, then that means they keep paying out claims. So that means it needs to be mitigated. So really get someone in there to look at that issue and mitigate that issue to move forward. I think that's a way to help our associations.
And we have a lot of clients that are very well versed in maintaining their properties.
Yes.
They have those reserve schedules. They have that high risk components inspection and compliance. So it's just all of it together, looking at insurance holistically, not just it's a policy that protects us. There's just a lot to be involved in the world of insurance, right?
Yeah. And utilizing your agencies, because I mean, we have a risk management team that comes in, our risk consultants, risk control will come in and look at the property and help mitigate the issues that you have, or at least help prevent also future issues that they may have. And that's something that I don't think a lot of agencies do. And the carriers, actually from a claim side, the carriers will bring their adjuster and they work for the carrier, right? Versus at Alice, we have our own claims adjusters and that work for our clients. So that does set us apart from a lot of our competitors.
Right. That's true. Just looking at what an agency does, services that they provide. That's the value of an agency, right?
Yeah, I agree.
So just bringing it back. Why are we doing this again? Well, what's the intent of what we're trying to do?
It's really educate the community, educate our clients, educate property managers, board members, owners on the importance of insurance, because that's what makes the kind of world go wrong. You need insurance to buy a house, to do a mortgage. I mean, all those things are going to be important. And having a baseline education of it, they don't need to be the expert, but at least have a baseline education and understanding why insurance will help their property and even get better. So you're not in a pool where you can't get insurance, because that's when you're really in trouble. If your building's uninsurable or your unit's uninsurable, and self-insuring is not a good idea.
I know it's probably not possible in a lot of times for condos, right?
Yes.
Yeah. So you need to have a policy in place. You need to have these strategies in place just to remain insurable.
Yes.
Right? And that's something that we like to help with. We help with our clients, and then we like to help with other people too.
Yeah, that's great.
We care about the community, right?
That's right.
We live here all of our lives, and we just want to make sure that we look out for each other. And we're going to be here for a long time. So I'm just looking forward to continuing to help people to learn about it.
Yeah, I agree. Well, that sounds like a wrap up.
Yeah. So that pretty much wraps up our first episode of Risky Business. Again, my name is Choi.
And I'm Sean Satterfield.
Like, comment on this video and give us your condo queries. Tell us about what questions that you have, and we'll consider it on a future episode of Risky Business. Thank you so much for joining us. Mahalo.
Mahalo.